Welcome to the Coin Bureau Weekly Crypto Review. Here are this week's top headlines in the crypto news. China's crypto crackdown continues, making sense of the madness and how Miami's mayor might save the day. Bitcoin is back on Elon Musk's menu. What he says it will take for Tesla to accept BTC as payment again, and why this could potentially lead to miner centralization. Meanwhile, at Microstrategy, Michael Saylor bets big on Bitcoin by taking out loans and selling billions in company stock to finance more BTC purchases. Is he being too bullish? SEC looks away from cryptocurrency. No mention of regulation, a delay in Bitcoin's ETF filings, and asking for public opinion about exchange-traded products. What is their endgame? Elsewhere, regulatory retaliation returns. Private and public institutions in South Korea, India, and the United Kingdom clamp down on cryptocurrency trading and payments. Should you be worried? Anarchy in the UK. Despite regulatory rhetoric, UK investment into cryptocurrency hits an all-time high, while exchange-traded cryptocurrency products around the world add billions to their holdings. A closer look at the numbers. Grayscale gets greedy. Another 13 cryptocurrencies are under consideration for Grayscale's crypto trusts. Which ones will make the cut? Digital real estate on the rise. Decentraland posts its most expensive sale of digital land to date in a bearish market. So, who bought it and for how much? And a closer look at that Bitcoin death cross in your weekly crypto market update and forecast. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy, and what you're about to see is educational content, not financial advice. You can find any topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Last week, the Chinese province of Sichuan turned off the lights for 26 cryptocurrency mining operations. This makes Sichuan the fifth Chinese province to heed the government's warnings about the financial risks and energy consumption associated with popular cryptocurrencies such as Bitcoin and Ethereum. What's different about Sichuan's crypto mining ban is that most of the miners in that region use abundant and renewable hydroelectric power, meaning any emission concerns are unjustified. It seems that China's recent anti-crypto rhetoric has its roots in the rollout of its central bank digital currency, which can now be withdrawn into fiat at over 3,000 ATMs around the country. For those who don't know, cryptocurrencies are a very popular way of moving money in and out of China, most notably via Tether's USDT stablecoin. This tech doesn't jive too well with the Chinese government's plans to put in a digital currency that offers maximum control and surveillance. Anyways, pro-Bitcoin mayor of Miami, Francis Suarez, has extended an olive branch to these becalmed Chinese crypto miners. Miami's primary energy source is nuclear. It's abundant, it's consistent, it's green, and most importantly, it's cheap. Unfortunately, Miami's nuclear offer is still more than 3 times as expensive as alternatives in neighboring Asian countries such as Kazakhstan. However, Miami is still on the table due to the stability guarantees as far as government policy goes. The only issue is building the facilities needed to house cryptocurrency miners, which should be manageable given the record incomes crypto miners have posted in recent months. As crypto becomes greener, Tesla is inching closer to once again accepting Bitcoin as a payment method. In response to a Cointelegraph article posted on Twitter, Tesla CEO Elon Musk highlighted that at least 50% of all Bitcoin mining must be done using renewable energy before Tesla can reverse its stance. While it's nice to have a goal to work towards, this threshold raises some questions around miner centralization. As some of you may recall, Michael Saylor beckoned Elon Musk to join him in helping to create the Bitcoin Mining Council, a conglomerate of some of the largest Bitcoin miners in North America. The goal of the Mining Council is to increase transparency about energy usage, and though that is indeed a noble goal, it presents a threat to the security of the Bitcoin network. Here's why. At the moment, anyone can join the Bitcoin network as a miner to process transactions and earn BTC. Some of these miners are known and others are not. And this is a good thing, because if you knew where all the miners were, then you could potentially coordinate an attack against the Bitcoin network. This is especially true as Bitcoin mining operations become gradually more centralized, with a few key entities accounting for a significant portion of the hash power. If Elon's request requires most Bitcoin miners to join the Bitcoin Mining Council and reveal their identities and locations on the grounds of being green, this clearly poses a threat to Bitcoin. Perhaps I'm getting a bit ahead of myself, however. After all, the main man backing the Bitcoin Mining Council is Microstrategy CEO Michael Saylor, and he's been buying up BTC like never before. Last Monday, Microstrategy asked the SEC for permission to sell over $1 billion of its own stock to finance operations, including the acquisition of Bitcoin. This is in addition to the $500 million of corporate bonds it sold to finance more BTC purchases, which have apparently not yet been made. MicroStrategy currently holds over 90,000 BTC, which makes it the largest holder of Bitcoin amongst publicly traded companies. Depending on market prices, an additional $1 billion buy would bring MicroStrategy's Bitcoin holdings to over 120,000 BTC, assuming they go all in, of course. When asked whether MicroStrategy's heavy Bitcoin allocation is making shareholders nervous, Michael noted that most shareholders are aware of the dwindling value of the US dollar. Moreover, MicroStrategy has continued to post record revenues, which is keeping investor confidence high despite their recent stock dip. Michael also believes that many investors are using MicroStrategy stock as a buy proxy investment into Bitcoin, one which is arguably better than an ETF because MicroStrategy can leverage its position by taking on debt to buy Bitcoin. This is all well and good, but it's worth pointing out that MicroStrategy's recent SEC filing also revealed that, quote, future fluctuations in Bitcoin trading prices may result in our converting Bitcoin purchased with the net proceeds from this offering into cash with a value substantially below the net proceeds from this offering. This should serve as a sobering reminder that smart money sees Bitcoin differently to the average retail trader. For many of them, crypto is very much just a vehicle to make some mad cash. For many of us, it's the future of finance. This is why it's quite strange that the SEC didn't note cryptocurrencies on its annual regulatory agenda. Instead, the SEC seems to be more focused on the dangers of retail trading on Robinhood and the coordinated efforts by Robinhood types to take down over-leveraged hedge funds. As highlighted by attorney Jeremy Hogan, you can already face legal sanctions if you're found to be an active participant in these so-called corporate pump and dumps, so be careful. The real question is why the SEC is once again delaying its decision about whether or not to approve Cryptoin's Bitcoin ETF by only 10 days. The SEC's explanation is that it just needs more time to review the applications. Others speculate that this might be because the SEC knows that the fine folks over on Wall Street would love to get in on BTC when it's trading at a huge discount like it is now. This theory would jive quite nicely with the SEC's bizarre request for public input about whether to approve VanEck's Bitcoin ETF. This request is also somewhat concerning, as it suggests that the SEC doesn't know enough about the cryptocurrency market to make this decision independently. Now, if you happen to be interested in giving your input to the SEC, I'll leave a link to their contact details in the video description for your convenience. Now, if only other countries were as curious about their own citizens' views about cryptocurrency. India is once again playing chicken with its domestic crypto market with a new bill to ban crypto under review. India historically flip-flopped on its stance on cryptocurrency, and this is primarily due to its central bank. The Reserve Bank of India is not a fan of cryptocurrencies for obvious reasons, but illicit activity involving cryptocurrencies is also a legitimate issue in India. This seems to be nothing more than FUD, given that Kraken, Bitfinex, and KuCoin are on the cusp of expanding their operations into the South Asian country. In East Asia, South Korea seems to be cracking the whip on crypto traders and exchanges. For starters, banks have been instructed to label crypto traders as high-risk clients. This is because there are roughly 60 unregistered cryptocurrency exchanges currently operating in the country, and if one of them gets hacked or goes under, this could leave banks holding the bags of any over-leveraged traders. Consequently, South Korea is cracking down on smaller cryptocurrency exchanges and paying very close attention to what they consider to be high-risk cryptocurrencies. Over 11 crypto exchanges have been issued warnings to stop trading volatile altcoins, and Upbit has already delisted 5. Now, I didn't recognize any of them for whatever that's worth. If you happen to have an account with KuCoin or BitHum, you've probably received a few emails about their delistings as well. What's alarming is that even larger altcoins like Bitcoin Cash seem to be on the hit list of South Korean regulators, which really makes me wonder who's calling the shots over there. I have the same sentiment when it comes to the recent announcement that a bank here in the UK is going to ban its 5 million clients from purchasing cryptocurrencies. Now, the next headline makes it clear that they've shot themselves in the foot. Yes, a recent survey conducted in the United Kingdom suggests that more of us Brits bought Bitcoin than stocks last year. This is despite the fact that apparently 90% of all financial advisors in this fine old country are not very big fans of cryptocurrency. Well, to them I say, come watch the Coin Bureau and see why you're wrong. Now, this might be because they're jealous that 70% of respondents to that survey noted that they had made a profit on their cryptocurrency investments. On that note, it's worth pointing out that if you invested at any time during 2020, you are still in profit, even with the current crypto market slump. It seems that the smart money knows that this dip is temporary, and this is reflected in the record levels of cryptocurrency custodied by exchange-traded products around the world. Canada's Purpose Bitcoin ETF alone has added more than 2,000 BTC to its holdings since the crash in mid-May. However, the leader in this crypto category seems to be Grayscale. Grayscale recently announced that it's looking to add 13 more cryptocurrencies to its trust offerings. For those unfamiliar, Grayscale's cryptocurrency trusts are exchange-traded products that are basically like ETFs, but not quite as good. Even so, Grayscale's 14 trusts custody over $34 billion in crypto. The 13 cryptocurrencies Grayscale is currently considering are 1inch, Bancor, Curve, Carver, Kyber Network, Loopring, Polygon, Ren, UMA, Solana, Near, Definity, and 0x. Note that this is in addition to the 18 other cryptocurrencies Grayscale is trying to file trusts for, and I'll leave a link to the full list in the video description if you're interested. In terms of which of these tokens will get a trust, I believe that Polygon, Ren, and Solana are the most likely candidates. This is simply because all three have seen explosive growth in terms of development, adoption, and funding over the last few months. Solana is quickly becoming a favorite among crypto-oriented investors and initiatives. Polygon has seen an explosion in user adoption and is believed to be critical to the Ethereum ecosystem at this point in time. Ren is the current leader in building cross-chain bridges between cryptocurrencies and has integrated with most major blockchains already. More importantly, all three of these cryptos are arguably better than Grayscale's most recent trust additions. These were Basic Attention Token, Filecoin, LivePeer, and Decentraland. Speaking of Decentraland, someone recently bought a massive chunk of land in its virtual world for over $900,000 in mana. The buyer is Republic Realm, an investment firm backed by Binance and Galaxy Digital that specializes in virtual real estate. Interestingly, Republic Realm only works with high net worth investors that it personally invites. This makes me wonder who the real buyer actually is. Now, while it's not yet known what Republic Realm plans to do with the 259 parcels of land it purchased, it notes that it has, quote, big plans in the works. Whatever they are, let's hope they get to them quick because the crypto market keeps crashing. Looking at the Bitcoin charts, it's clear that prices continue to bounce between price zones consistent with a Wyckoff accumulation pattern. That's not what I want to talk about today, however. In last week's crypto review, I noted that there was a death cross forming on Bitcoin's daily time frame with the intersection of the 50-day EMA and the 200-day EMA. Now, depending on when this video makes it out, it's possible that the death cross might already be here, and I reckon it's important to understand what it is exactly and what it could mean for Bitcoin's price in the short term. Put simply, a death cross is when the short-term average price of an asset falls below the long-term average price of an asset. This is significant because it suggests to traders that the asset in question may be overvalued, and in this case, that's Bitcoin. Historically, a death cross has resulted in a 30 to 70% dip in Bitcoin's price, but the severity of each dip has declined over time as Bitcoin becomes less volatile. To be blunt, it's likely that we will see a nasty drop in the days ahead, but the real question is whether this will begin a bear market. The short answer is that it depends on what the stock market does in the coming days, because, as ever, the crypto market is correlated to the stock market. Turning to the leaderboards, this week's winners are AMP, Zinfin Network, Quant, Shiba Inu, and Phantom. Now, AMP was one of last week's winners, and the reason why it keeps pumping seems to be the same as last time, namely momentum from its Coinbase listing. AMP seems to be the cheapest crypto on Coinbase in dollar terms, so I suspect that there are many inexperienced retail traders who are investing thinking it will grow as big as Bitcoin, not knowing what a market cap is. Zinfin is a crypto project I'm honestly not very familiar with, but my first impression is that it's a fairly lackluster enterprise-oriented cryptocurrency project. That said, it does have its own native blockchain, and it's done enough to get the attention of Flare Network, which partnered with Zinfin project a few days ago. This seems to be the driver behind XDC's recent pump, but I will caution that XDC has very limited exchange support and very low volume. When it comes to Quant Network, I'll admit that I seem to have been wrong about QNT's limited upside potential when it made the winner's cut last week. In my defense, I had no idea that Quant Network would be upgrading its closed-source Overledger protocol, which acts as an operating system for all cryptocurrency blockchains. Shiba Inu is a crypto I never thought I would have to name as a weekly winner ever again, but lo and behold, Coinbase decided to list this shitcoin, and now it's pumping again. I take it as a sign that the institutions are trying to squeeze that last drop of retail greed before they buy up the dip. Thankfully, the fifth winner is far from being a sham, and that's Phantom. The FTM token recently listed on a series of exchanges including Gemini, which I would argue was long overdue. Phantom is a fascinating project, and I'll be covering it in depth later this week, so stay tuned for that. If you're wondering why I'm not pulling up the charts on any of these alts, it's because I believe that Bitcoin is fully in control of the market at this point in time. What happens over the next few days will make or break these alts, so be ready. That's all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, you know what to do. Hit that like button, subscribe button, and bell icon too. If you want more of me, head on over to Twitter, TikTok, and Instagram to get a sneak peek behind the scenes. If you join my Telegram channel, you'll get the daily crypto updates you crave, and signing up for my weekly newsletter is a great way to get the tools, tips, and tricks you need to get paid. And of course, you can support the channel by heading over to the Coin Bureau merch store and picking up a shirt or hoodie, or both. Links to all these resources are in the description. Thank you so much for watching, and I'll see you all in next week's episode, if not before.